Good evening, all. This is Shea Horowitz with ShogunTrading.com. This is Sunday night. This is a free weekly newsletter we send out. There's quite a bit of stuff going on out there right now, and we have to be aware of it. I'm not talking about Elliott Spitzer. I'm talking about the market itself. We are in a little bit of a pickle right now because the market wants to do something, but they're not letting it do it. Let me show you what I'm talking about. This is a weekly chart of the S&P 500, one of the major indexes that we have. And you can see the very obvious top over here. You can see basically a head and shoulders. If this is the left shoulder, this is the right shoulder, this is the head. Right shoulder is lower than the left shoulder, which is excellent. It really shows it's a great top signal. We came in for a first wave, and that was tremendous trading. It was great. I mean, everything was falling into place. Stocks were working very well for us, and then it bounced back up for profit taking, which is obvious, no problem. And then the market has been trying to go down. Now, as the market goes down, every time the market goes down, the Fed steps in and saves the market. They lower rates, they inject liquidity, they save Fannie Mae, Freddie Mac. They whatever they can do, whatever they do every time, just to save the market, just to take care of the market, so the market does not come down. Because I think it really looks bad on us right now if our market will come down. Frankly, I think you can only manipulate the market. You can only save the market for so long before the market has to save itself, before the market will overwhelm it. The problem is when you have people saving the market. Let me go back to the daily chart real quick. The problem is when you have the Fed saving the market every time is that a lot of the power of the downtrend comes out of the market, because the short sellers, the aggressive sellers, every time they try to go short, the Fed comes up with some kind of news and the market goes back up. So they get their hand slapped. And how many times does it take for them to get their hand slapped before they give up on going short? And the Fed has basically taken the wind out of the sails of the short sellers, the wind out of the sails of the downtrend. I think that's all fine and dandy, but I do think there's going to be a certain point where people just give up and say, you know what, I just have to be out. For safety's sake, I just have to sell my stocks, and I need to be out. And I think that could happen fairly soon. I think that as traders, and I hope that you are a trader and not just an investor, I hope that you will be able to take advantage of this downtrend. I hope that you'll be able to actually make money while everyone else is selling. And you're going to do that by going short. Now, this is the S&P 500. This is really important. Really, really important. First wave, support, 1270. Came back up. Coming back down right now, 1270 again. What happens if we break this 1270? What are people going to say? Think about it. Think about what are people going to say? Well, you know, our bounce back in January, now we broke below it. Wow, things are really getting bad. I'm going to sell. And that's what you want to see as a trader, because then you can go short. This is the S&P 500. Let me show you some other indexes as well. NDX, the largest, in my opinion, the most important NASDAQ index as well. You can see the same thing. Very strong downtrend, consolidation, come back down, and now it's trying again. That's a 1695 support level. Let me show you the Dow Jones Industrial Average. You can see the same thing. Very strong downtrend. Come back up. Come back down. Actually, this line should be moved over here. Come back down. Now, what happens if we break these levels? Well, what happens if CNBC, CNN, Fox News, all of them are going to come up and say, wow, you know, we broke below January lows. What's happening with the market? And I think we're going to go into another wave down. Now, the real trend is real on a weekly basis, where you have first wave down, consolidation, coming back down. If we break down, it could take us into a longer-term downtrend, a second wave in a longer-term downtrend, which is really no big deal. People are so afraid of the market coming down, but you know what? If you know what you're doing, you can actually make money off the market coming down. Let me go back to daily charts. So what I'm looking to do right now is I'm looking to hedge. I'm looking to go short the market itself in order to make money off the market coming down. We did the same thing with the real estate market, by the way. If you remember back when we gave you Tall Brothers, it was a short around the 26.69. We gave you Ryland Homes short at the 40.63, and you really made good money on it on the way down. We also gave you Pulte Homes that also did very well from 24.49 down to down to $8. That was the hedge against the real estate market. If your house value goes down, but you make money on shorting the housing stocks, you're hedging yourself pretty good. You come out of this. There are three main index following ETFs or whatever you want to call them, trust that could work very well for us. The QQQQ works very well with the NDX. It mirrors the NDX, the NASDAQ 100. And if the NASDAQ 100 comes down, if the NASDAQ 100 breaks support, this is the one I would go with. 41.54 would be a good entry for this one. You want to watch this one at the same time that you watch the NDX itself. For the S&P 500, I would do the spiders. SPY. 127.43 would be a good entry on this one. Go short. S&P 500, same thing. 1270. If you see the 1270 break, you can go short the spiders. The diamonds, DIA, work really well for the Dow Jones Industrial Average. Again, 117.37 would be a good entry in this one. And it works very well with the INDU. This is never a great thing to say, wow, I think that the market is going to come down. But as traders, the more you trade, the more you're going to find that 80% of your trades are going to be on the short side. And you're going to love the short side because the short side is so much more aggressive. You're going to make so much more money on the short side than you are on the long side. Because the short side involves panic. And whenever there's panic in the market, that's where you can make the most amount of money because it just moves faster. So that's what I suggest that you do. If anything, it's a hedge against whatever other portfolio that you have. By going short on these. We've been through a couple months of very, very tough trading because the Fed has been saving the market. The market has not been going into a trend. It's been going absolutely sideways. What I'm hoping that's going to happen right now is that we get some kind of a break and we go into momentum again. Whenever we go into momentum, we're going to short heavily. We're going to trade heavily because that's where we make the most amount of money. This is where we make the most amount of money, right on this area, when the market is actually trending. When the market is consolidating, it's danger area. We try to stay out. The market is coming down again. We start coming back in. We still have to watch out for the Fed saving the market. We have a Fed meeting on Tuesday. They might drop rate. Well, more than likely they're going to drop rates again, 3/4 of a point. Not my field of expertise at all. I am a trader. I don't really care about the fundamentals. I just care about how they affect the market, what they're going to make the market do, and we trade based off of that. We also have Bear Stearns that might be going out of business this week. I don't know. That's the theory, but then again, they might come out and save the market. I want to see the complete capitulation. I want to see the complete break when we actually break the support levels, and then we'll be able to go across the board. In our daily newsletter right now, we are starting to accumulate some shorts. And if the market breaks, I will accumulate more and more shorts. I will build a position on the short side with more and more stocks that are going to be even more aggressive in order to take advantage of this downtrend. If it doesn't happen, I don't really care. I'll just close everything. I'll make the short-term money, close everything, look for the next trend. It's no big deal. But that's basically the plan at this point. Anyway, have a great week. Watch out for Bear Stearns. Watch out for Tuesday for a FOMC meeting, interest rate drop. Watch for the Fed trying to save the market again. If they don't save the market enough and we do get a capitulation, we do get a break, don't forget to go short. Have a great week. I will talk to you next Sunday. Take care.